and I've been with GroupM almost as long as my twins have been on the planet. 5 years in this last stint with GroupM South Africa. But previous to that, I was working for an independent digital media agency in the UK. And during my tenure there, the business was acquired by a WPP affiliate, the Syzygy Group. And that was when I kind of first had exposure to GroupM as a business, I guess. It's when GroupM was first on my radar. So going back to 2004 was when I started transacting on digital media through sort of Google's buying system, Google AdWords, where we were kind of running sort of paid search campaigns. So that's just a sort of a top line intro about me sitting on my saddle. So also to just help you understand my role within GroupM South Africa, heading Nexus. What is Nexus? Nexus is effectively the practices and solutions arm of GroupM. Our intention is to make every ad experience work harder. We are strategically advising clients on where they should allocate their media investment. Within the digital media ecosystem, it is quite complex. It's fast growing. There are a number of large global players who, through their scale and size, and in particular their ownership of, I guess, data, which I guess could be considered the new oil, does make the landscape of our media advisory and media investment and buying quite skewed to digital platforms, which give us a lot of information, mostly data points, to ensure we are buying the media in the right place for our clients who are paying for that advisory. Now, our view is to also make every ad experience work harder. So just to give you a top line context on that, if we are buying a display impression on behalf of one of our clients, whether it's a local or a global client, we use verification technology to make sure, firstly, that impression was seen by a human being, which is quite important because the digital media landscape represents significant billions of dollars globally. And the programmatic nature of a lot of the inventory that is bought and sold globally is an opportunity for bad actors. And these bad actors appear in many ways, shapes, and form. That could either be fraudulent impression views, where basically an army of fake machines and server bots would be set up to mimic human activity online and browse lots of websites and click lots of ads, but those wouldn't be humans interacting in a normal way. So that wouldn't be the consumer of our clients' services and products. That would just be a bunch of machines deliberately set up to view advertising, to basically monetize inventory, and it's quite an area. So just going back, we want every ad to be viewed by a human being. So we try and eliminate the fraudulent impressions. We want that ad to be viewed in a fair environment. So and make sure the ad is actually viewed, because a lot of ads are served on a web page but not necessarily seen. If we work hard to eliminate that, to make sure every ad is working harder so that our clients are getting better bang for their buck, but also there is much more of a fair distribution of that advertising spend to the right players within the media ecosystem. Okay. Moving on, and this is quite focused, I guess, on GroupM and WPP. We are part of a WPP. Our annual results, financial updates are available in investor centers. A few weeks ago, we had our Capital Markets Day, where a lot of our global leadership sort of presented to investors to give a pretty good view of what happened last year, what's happening this year, and how we are investing, consolidating, and what are our growth areas as a business. And I know some of that had been shared, but I think more importantly, from a local perspective in GroupM South Africa, how do we price ourselves for our clients? So again, our clients, and we are usually managing the entire media investment on behalf of our clients. So that would mean all channels. And again, my definition of channel here is the linear TV investment, the radio, the print, the out of home, and the digital. And within digital, that could be anything from a sponsorship, like a homepage takeover on one of the bigger publishers who might have presented last week, through to paid social, paid search, and a programmatic media investment. So our contracts with our clients are usually split into one of two areas. There's either a commission on advertising spend associated with those media placements. And obviously, the more clients spend in that sense, from a media perspective, the higher our commission. But at the higher our total commission earned, not the percentage commission. And that's obviously where we would like to see a happy, healthy, growing GDP and media investment from our clients. Over and above that, as the commission and the media investment landscape does shift from above the line channels more and more into digital channels, it does mean we need to invest in more people to operate platforms, in more people to be well trained on strategically advising our clients where to better allocate their digital media budget, but also importantly, investing in data and technology to help us fulfill those investments in a smart, efficient way to the benefit of our clients. And obviously, how and where do we invest in generative AI to make life easier for ourselves and better for our clients, all with a view of making every ad experience work better. Okay, so that's broadly sort of the first area, and then there's often what we would call sort of an FTE structure on other contracts where a client would prefer to sort of buy a team of varying experts within our business across digital buying, out-of-home planning, as an example. And then we would charge a percent on that person's salary plus a margin so that we can afford to pay for salaries and afford to make sure everyone has a laptop, internet connection, and other sort of cost of business. But I think it's important to note that and certainly, following myself this morning will be a Dentsu presenting, which is also, I guess, a global competitor to us in that they also have global clients and local clients. So touching on our local and global clients, sorry, I'm just getting a pop-up. I just want to close that. We do have a lot of our global clients where through our client-facing agencies within GroupM like Essence Mediacom, Wavemaker, Mindshare, we might be working on global client assignments, in which case often the contract is not negotiated in South Africa. We just kind of receive this sort of South African affiliate contract and operate accordingly. But then also, yeah, for the local clients, again, we also have a combination of those contracts, either commission on ad spend or the sort of FTE model, which where we transparently disclose to our clients the salaries of our people at different levels that they've requested on their business, and the sort of margin we put on top of that to run our business. But it's collectively the clients or the contracts are all quite varied, and the payment terms in particular are quite interesting. Media investment often signifies a big portion of a client's total advertising spend. And advertising spend would usually split into production and media. Production would usually sit within an ad agency or creative business, which would make the content, I guess, that we would then distribute through our media buying and investment. But the payment terms is an interesting area, and obviously a point of discussion. But worth noting that payment terms with some of the bigger walled gardens like Meta, Alphabet, and I guess Amazon when they launch on our continent soon from an advertising spend perspective, are usually not too rigid, are quite rigid. And as an example, if we ever miss a payment, on a 30-day payment term, possibly with one of the big walled gardens, our accounts get shut down very quickly. I guess that's the power of the power of ad tech. Sorry, just I know you wanted me to go through the whole presentation and then ask questions at the end, or do you want? I'm more than happy to be disrupted and have hands up or throw questions on each topic. It's really up to the commission.
Julian, I think run through your presentation. I think that's easier, yes. And then at least if we have at least an hour and a quarter, so maybe if you can at least make sure you're done within 30 to 45 minutes, that'll be great.
Yeah, sure. Got you. Okay, thanks. So moving on, there was also a question on revenue sharing agreements. I mean, we don't enter into rev share agreements. We enter into the sort of client contracts I just mentioned earlier. So there's we simply don't do those sort of rev share things. The question on ad tech products and I guess ad technology. So we don't operate our own ad tech products. We utilize the third-party demand-side platforms and supply-side platforms. And our role is really to sort of optimize that value chain. And the programmatic technology where we have the demand-side platform where we are buying, and then the supply-side platform, which usually plugs into the sort of the supply source or the inventory on that side. Our role is purely to optimize that value chain, because from a programmatic perspective, there are so many different routes to buy an impression or to buy an online video on behalf of our clients. Our role is to try minimize that route to the purchase and basically simplify the supply chain as much as possible, because that works to our clients' benefit, it works in our benefit, and it works very much in the benefit of the media owner, who should actually be benefiting from the revenue of that ad spend sold. So if you think about a path of purchase with lots and lots of distributors and I guess middlemen, to use a term, the more distributors and intermediaries you can cut out means that as an example, 100 Rand that a client is spending that we are managing, as much of that 100 Rand goes to the media owner who has actually served that impression, that banner, or has run the video on their website, their app, or their sort of property that they are trying to monetize through advertising spend. Okay. I will touch on a little bit later how when we evaluate which DSP to use, and that would be our programmatic sort of trading technology that we are just sort of utilizing, when we do our RFPs globally or locally on which DSPs to utilize on behalf of our clients, one of the considerations which we are forced to build into our RFP, I guess, sort of landscape or evaluation criteria. And when I say forced, that's a term just because of inventory exclusivity on certain DSPs. So an example there would be if we want to buy YouTube inventory on behalf of our clients, which is very, very much a growing area, as linear TV has the linear TV landscape in South Africa has significantly changed quite quickly, and the budgets have dropped. There are, I guess, two sort of main reasons for that. The first reason would be there is more growth of, I guess, smart TV distribution, where someone's TV might not even have bunny ears on it anymore. I guess they're more smart TVs. When you plug the TV in for the first time, even your remote control has a YouTube and a Netflix button on it, as an example. So there's a lot more connected TV being viewed and operated. Certainly, I guess data costs, hopefully they will continue to decrease. But there's a lot more YouTube and Netflix and sport highlight viewing on handsets. But over and above, I guess, the shift of digitization in South Africa and more availability of data, Wi-Fi and connectivity, we've also noticed that load shedding has had a particular impact on linear TV viewing, where your usual sort of TV spots which we might have been buying on behalf of our clients on key evening peak or morning peak periods on TV, are no longer as viewable purely because of load shedding. So there has been a lot of work gone into understanding the data points, the inventory availability, and the pricing to see what media shifts need to happen with our clients' total media investment. And a lot of that does come to digital, which from my perspective can be a little bit stressful. It means more resources required, more data and technology partnerships required too. But what I told you about the shift from linear to more online video definitely plays into YouTube's favor. YouTube being a strong online video proposition with significant reach, with a huge volume of advertising inventory that we can buy, but also a lot of data points based on the content of the videos viewed that we might want to serve an ad in, and what someone's logged in state is telling Google about their preferences, their habits, what might be purchased in their household, etc. So when we are doing a DSP RFP, YouTube is absolutely critical as an area we need to buy ads for. And when I say we're almost forced to add the DSP exclusivity into our RFP criteria, well, YouTube is one of those. And YouTube has to be acquired through the DV360 DSP, which is the Google-owned one. So from that example, as much as we try to optimize the value chain, sometimes our DSP choice is determined quite strongly by the inventory availability. Okay. As a case in point, another one of our global clients, who is quite a big advertiser locally. I just won't disclose their name in this forum, but in this public forum, but they have a global agreement with an alternate DSP. So we manage the majority of their online video and all their programmatic sort of buying and optimization through a separate DSP. But then for the YouTube inventory, we need to use the DV360. Okay, just moving on to supply path optimization. So this is where we increasingly spend quite a lot of time. As we found, so I'm just going to, just from an understanding perspective, I'm just going to try to simplify this as much as possible, where, we have been buying display and video inventory for a long time. Sometimes that inventory is conducted as an insertion order, which would be meeting with media, various media owners, evaluating their offering, and then choosing to do a deal with the one that best suits our client's brief, agenda, budget, etc. Over time, and as the market and our clients and the whole digital media ecosystem matures, there becomes more opportunities to access most inventory programmatically. So instead of doing the insertion order deal, which would usually be sort of a short-term contract, and then we would send our creative to the media owner would put it up on their website or app, and then we would receive the reports at the end of the month or at the conclusion of the flighting period. That's now shifted a lot more programmatically, where the buying is actually done by the DSPs and SSPs, sort of SSP giving a signal of what inventory is available, and then the DSP scanning for those signals and choosing which is the best impression to bid for, basically. But this is a sort of a small diagrammatic example of how the DSP is what us as the agencies are operating. Has multiple SSPs to choose from. So, and I'm really encouraged that I think you mentioned tomorrow that Magnite is presenting. I think that'd be really good to get an SSP on board and sharing information. But if we were to set up a a brand new programmatic campaign in our DV360 DSP, sort of the default targeting is to choose, there's somewhere between 55 and 60 SSPs, which is quite a lot. So that's a lot of intermediaries and middle people. And a lot of those SSPs are selling and packaging the inventory on a very similar overlapping set of apps and publishers. So our view is to find which SSP offers the perfect inventory at the perfect price. And where does the advertiser and the publisher benefit the most financially from choosing a certain SSP? So, I mean, our view is quite simply, let's just not be inefficient. And like, why are there so many expensive paths to supply? By that, I may mean if we're running an ad for a financial services client who might be trying to advertise like a new car insurance product or something, they might be looking for audiences online who have recently purchased a car or have recently sold a car, or, I guess giving a signal that they might be interested in a car insurance switch or a new car insurance policy. So where would be the best place to advertise to those clients, and what are the data points we know of them? As an example, I don't know, one of those websites might be cars.coza or Wheels24, or autotrader.co.za, just to name a few. I mean, there are obviously many options there. But if we're trying to buy one of those impressions, which SSP do we end up buying through? That's an area where we're really trying to make sure we buy accurately. And again, there are a lot of data points there. And also, fortunately, we are trying to make sure that we buy from a smaller number of SSPs to ensure we have the most efficient and least expensive path to supply. Over and above the efficient paths to supply, another area that our global clients in particular question us on is, what is the carbon output of a media schedule? Now, in terms of utilizing an efficient, sustainable, and sort of media investment methodology, if we can shrink the supply path from our DSP seats and what we're buying on behalf of our clients to the actual ad that gets displayed on a publisher's site, we're not only reducing the cost to the advertiser and increasing the revenue to the media owner in minimizing that supply path, but we're also ensuring that there are significantly less ad server calls and information bouncing around on the global connectivity and cloud and undersea cables, which can only be a good thing for helping reduce the carbon output of our clients' media schedules, which also goes a long way to, helping out on reducing global warming and making sure that, again, advertising experiences work better. Quite a complex sort of scenario, but the truth is the amount of information and data that is flowing just within the digital media ecosystem is growing exponentially. And we have a responsibility to try and understand that and to try and minimize that through efficient buying. Okay. And that was just, I guess, an example of one efficient path to supply. There was just a question on, I guess, our contractual agreements. We have shared these sort of sample contracts already, but just our client consent would be required to share any specifics. And then, if we have a look at how our clients brief us, yes, the briefing happens in various intervals. Often we'll be looking at sort of an annual flow plan based on excuse the background noise here, based on the client's, usually we plan on a client's fiscal. That's just when the clients would have a pretty good view of when their budget becomes available from, I guess, their executive, and what is their total marketing budget for the year, and how they would maybe split that up across events, sponsorships, creative assignments, and certainly the media investment. So, I mean, clients provide us a brief. There are specific criteria we often need to meet, like helping grow their business, whether that's through the services they offer or the products they're selling. And we will work together to kind of tightly define that brief. And we've got a view of the context, the minimum performance, what the target audience we need to reach is, the coverage, costs, and results required. Ultimately, our clients are trying to grow their market share, and to do so from a pure top-line marketing perspective, they usually need to grow their share of voice to grow market share. So a lot of the briefs sort of allude to that requirement from a top-line perspective. Then, we would review the brief, understand the client's requirements, increasingly going forward with digital, trying to understand what are the data sources that the clients may have compliant access to, which we can use to enrich and the sort of audiences available on our side from a media buying perspective. So, we would then revert with additional clarification questions, then approach media owners or sort of compliant data providers, and brief them using that information provided to clients. We would understand then what each media owner can offer. If it becomes a long-term engagement, we might embark on more of a detailed sort of RFP with the media owners or sort of data providers, then compare those offerings and present each option and the proposed performance to our clients, because ultimately we're trying to grow their market share through a growing share of voice. And then, what are those media owner capabilities? Sometimes like a homepage takeover or a sponsorship deal might be actioned directly. And I had touched on that a bit earlier. That's sort of insertion order deals and agreements where the creative wouldn't be sent through the programmatic pipes. It would usually be emailed to the media owner directly, and then they would serve it on their site. If it's a run of site advertising, that would normally require a DSP or demand side platform, but also the client's digital maturity plays a role. Clients with a higher, more advanced sort of digital maturity would opt for a DSP. That really allows for a single view of the customer and allowing us to help our clients deduplicate their reach, because you would have sort of one buying platform transacting on multiple sites, apps, and media owners. So you can get a true view of what the actual reach of a campaign might be, rather than a disparate, unaggregated view. Okay, and then, our clients utilizing DSPs. I had touched on this a bit earlier when I'd spoken about the, certain inventory sources being exclusively limited to certain DSPs. But our specialists, our programmatic traders, and our sort of data scientists would optimize performance based on the brief in the DSP, which is effectively like a trading desk. Try and deliver the best results possible for our clients. And the one question was, why do we not use certain ad tech intermediaries? Sometimes there is a duplication of offerings, and the reality is, yes, we are a large global business, but we service our clients out of South Africa with South African resource, South African employees. And the skill set required to operate DSPs is quite a unique sort of niche skill set. And from the scale of our clients' investment combined with our overall client digital maturity, we usually wouldn't run on more than 2 DSPs per client for a year. The functionality and market of the DSPs available here, and there certainly are a few. There's DV360, there's Xander, there's the Trade Desk, there's Adform, as well as a growing number of DSPs which are specific to certain channels which are coming online. And by that, I mean, we've seen a big growth in out of home, where a lot of the out of home signage and I guess billboards are increasingly digital. And some of those digital ones, we can actually buy that inventory programmatically, which is a lot more efficient for the advertisers. And the good thing is it does open up the market to a number of new advertisers who might have been horrified at the cost of out-of-home advertising. But if you just need to buy a few seconds of a screen of a programmatic digital billboard, you also don't need to go through the production cost of printing and painting a big billboard. So that's a bit of a side point, but on programmatic digital out of home, there are a few new DSPs which focus specifically on programmatic digital out of home, like Hivestack, Sage and Carter, amongst others in market. But that again does speak to the functionality and I guess the inventory you're looking to buy. Over and above and then I mean, obviously commercially, the costing definitely matters. The DSPs tend to charge on a percentage of spend. So, if 100 Rand is being transacted through a DSP, they charge a percentage of spend broadly. Where we do see efficiency and more effective performance in the DSP is also in our back office and our finance team, where if we are buying a lot of our clients' inventory through the DSP, we get the invoice for the month for the client, and that's sort of aggregated by the DSP rather than receiving and needing to onboard hundreds of vendors. And receive lots of different invoices and reconciling. That is kind of taken care of by the DSP. I guess that is the purpose of the demand side platform, or one of. But then importantly, and I touched on this earlier, the exclusive inventory availability. So I had referenced earlier YouTube, but it's likely when Amazon launches in South Africa, we're going to have the Amazon paid search and the Amazon DSP also launching in market. So if we want to advertise on behalf of our clients within that Amazon ecosystem, guess where we have to buy? The Amazon DSP. And, Netflix, and increasingly as other sort of, I guess, connected TV offerings come on board, there is definitely a land grab for large businesses and DSPs to do exclusive agreements. And I'll just speak to an example in North America, which I think gives a good example of what might be coming into this landscape in South Africa in the future. But Walmart has obviously seen the significance of Amazon's advertising revenue. And, as a large retailer with significant data sets available to themselves, they're Walmart, for goodness sake. They have an exclusive DSP deal with the trade desk. If you need to buy Walmart inventory, you need to get it through the trade desk. And that's the exclusive inventory availability going on there. That does make good business sense. But at the same time, it can be quite challenging if you then need to buy inventory from multiple sources. Because if you think about it, the insertion order business we used to buy, we would have a lot of contracts, invoice agreements with multiple vendors. So, and then that sort of got intermediated through programmatic into, okay, we'll just do it all from one DSP. And now I think over time, we're going to see a bit more of an expansion. And thanks to the good work of the Competition Commission, maybe that expansion of DSPs and separating demand from supply could help us there. And then, on the restrictions by ad tech DSP intermediaries, I mean, we don't really have knowledge of the agreements between the DSPs and the publishers. So we don't see the percentage of spend that the DSPs would charge the publishers or the SSPs. That isn't really publicly available information. And although we do ask for it, we we don't really see it. Obviously, that would help us further manage the supply chain efficiently for our clients and also benefit the sellers of the inventory, so that they can fund, good quality journalism and also invest in tech and tools in the ecosystem. But yeah, we can't really provide more information in that space. And then, just I guess in terms of our view of understanding the unfair conduct of the big walled gardens, I'm not sure if this was mentioned last week, but the fact that as a consumer or someone we are trying to sell our products and our clients' products and services to, the consumers have free access to any Meta product, right? You just need to download the app and have a bit of data. You're not really paying to subscribe. We all use, or I'd imagine a lot of us use WhatsApp quite commonly. I know I use it to plan my life. We also might be using certain browsers, which are, I guess, free to use. And in a logged-in state, you get a bit more functionality from the browser or the sort of services of the tech platform. So if it's free, I guess you are the product, right? Because you are, I guess, the target audience for the very tailored advertising. But I think this is quite clear that the walled gardens have a very personalized view of behavior. There are significant data points that are owned by the walled gardens across various elements of the digital media ecosystem. And the more data owned definitely fuels artificial intelligence, which might be giving the walled gardens an even bigger opportunity and strength going forward, as more data is collected and as the investment in artificial intelligence is centered in a few areas and inaccessible by many other businesses purely from a budget and a capability and skill set perspective. And I know last week there was also some discussion from the sort of subscription-based providers, but the truth is Google, Meta, TikTok are really big players who, they don't necessarily charge a subscription, not for the majority of their large-scale products, but they are definitely receiving value from the logged-in state and the information they are acquiring. Yeah, and on the sort of free-to-read user bases, we are going to see a big change later in the year, which has been titled The Death of the Cookie. So basically, Google, through the ownership of, I guess, significant volume in the browser market, and also, I guess, the Android sort of and operating system and the app-linked Play Store there. When Google deprecates the third-party cookies during the course of this year, that basically means we need to change the way that we report from a digital media perspective, but also the publishers will not necessarily be able to rely on third-party cookies to ensure that their audiences are being sort of refollowed. And this is where subscriptions from a media owner perspective would definitely allow for audience generation. So hopefully the media owners who have built up large databases of compliant opted-in email addresses, phone numbers, that sort of thing, can use that audience intel in a cookieless future. And that concludes my presentation. I'm looking forward to some questions.
Julian, that was very, very useful, and I think part of the public hearing is not just for us to get insights, but also for the public and also the media and the platforms to get insights from each other. And so I certainly think this has helped us understand, coming from the advertiser side. So we do have a fair number of questions, and as I said, just avoid confidential information. And I apologize that we might keep you sitting there for a little longer. but hopefully you'll get a break by 12. The first question I had was just more around coming from the client side. I mean, you indicate that the client will give you, I suppose, their performance objectives, and they want to grow share of voice, but also their budget, and what they're willing to spend. And I just wanted to pick up, I mean, in that budget discussion, do you think the client's expectation now, given the lower cost per thousand that's available on digital, do you think their expectations have changed? And are you seeing clients wanting a lot more performance for less budget?
Yes and no. The fact that it doesn't make sense to have a race to the bottom on a sort of a buying methodology, or say you're buying on a cost per thousand impressions, which I guess is the standard sort of bought benchmark and pricing view for display inventory. Now, the lower that gets, the worse the quality of the inventory is going to get. Surely, I mean that's I guess a classic supply-demand situation, or a pretty standard view of you get what you pay for, right? And when I mentioned earlier that we are laser focused on trying to make sure that whatever we're buying for our clients is seen by a human, not a dodgy robot that is just trying to monetize ad inventory on behalf of bad actors, but also is served in the right environment, and has the opportunity for one of our clients' potential customers to view, interact with, and then get more information on the client's product and ideally or service, and move them down the sort of, I guess, conversion funnel where they might be more willing to buy, invest in our client's products or services and become a repeat customer. So I would be worried about the race to the bottom, because that means there is more bad quality inventory from a buying perspective, but also how do news sources and local journalism stay funded and stay sustainable? It does worry me a little bit. Yeah. And what's quite interesting too is if you are buying inventory on a CPM basis on a walled garden, say for example Meta, how do we know what is driving the CPM up or down? It's an auction-based model, right? It's a competitive system, but is the CPM controlled by the walled garden, or is it controlled by an efficient, fair sort of market dynamic? I think that's an open-ended question to the market and any listeners.
Thanks, Julian. And I think you said you'd followed a bit last week, but I suppose the news media is questioning whether an advert on their site is valued the same as any old random click, and has context or contextual advertising been lost to some extent in the race to programmatic advertising. I'd be interested to get your view on that.
Well, the truth is a lot of media owners in South Africa have also been, even before programmatic I guess sort of grew or took shape, or might have seen a race to a lower CPM that the media owners are receiving. A lot of the media owners in South Africa are using Google Ad Manager, which is the Google piece of technology that allows the publishers to serve ads on their site. So, and this dates back to, I think it was the year 2007, when Google acquired a business called DoubleClick. And DoubleClick was, third-party, independent, very clever technology business that basically ran the ad serving for a lot of publishers. So publishers and news sites would have used a DoubleClick product to serve ads and prove to clients that they had served what the client had bought, etc. I think it's fair to say that maybe from a competition perspective, that acquisition maybe shouldn't have happened. But granted, this was many, many moons ago. And it's possible that the pace of development in the digital media ecosystem didn't give clues to the future of how this would have played out. But the reason I'm saying this is that a lot of South African media owners, and not just South African, I think continent-wide and globally, had been using the Google Ad Manager system, which came out of this acquisition of DoubleClick, as their interface. So that's where they would be serving the ads that had been bought by the agencies or the clients direct. And in doing so, I think had given a lot of information to the business of DoubleClick and Google in terms of what was available and what inventory was available, and what was the pricing of that. Outside of that, when publishers hadn't sold inventory through insertion order deals, if they had 1 million impressions available in a month and they sell roughly 800,000, I'm just trying to use basic maths to give an example. The remaining 200,000 impressions, well, ideally they would either use those impressions to serve internal ads. I mean, if it's a big publishing house or publishing division, they might run those 200,000 ads to promote other sections of their websites or upcoming events, launches, etc. Basically, an internal marketing pool of advertising. Or quite commonly, they would run Google AdSense on that. So they would place a Google tag on their sites and then create rules within the Google Ad Manager system that, and it would be commonly called the waterfall, where the certain top end inventory of those 1 million would be sold for sponsorship deals. Then lower down the waterfall would be run of site availability. Then everything else at the bottom of the waterfall would be called, I guess, remnant inventory or unsold. And that would either be pushed into an internal marketing kitty or sold through an ad network. And Google AdSense was the most common one. And that would allow the publisher to generate a bit of revenue off what had been unsold inventory. It would allow advertisers to be able to buy cheaper revenue, I guess, cheaper inventory than the sort of top of the waterfall, but you had a lot less control and it wasn't always the best inventory available. I think the risk we have now is that cheap Google Ad Exchange inventory has maybe damaged the perceptions of advertisers, marketers, and even the pressure put on the media investment partners and agencies to continually receive low, be able to transact and buy sort of cheaper inventory, which might be good for an advertiser who's just looking at the number of impressions bought. But the more digitally mature advertisers are very well aware that they should rather be buying quality impressions. And that comes at a price. But usually the final outcome on sales, services, etc., that our clients are trying to achieve far outweighs, buying lots of the cheaper impressions.
And Julian, just on that, within the digital space, we heard last week that just as you've indicated, publishers will try to sell direct for a much higher cost per thousand because it is a quality context and quality inventory. I suppose the question was raised about how much of that direct is now sifting into the programmatic, where advertisers might be looking to at least get a portion of their sales at a cheaper price. And we had a discussion about whether advertisers who are linked up to direct to media, how much of them are slipping away into the programmatic, and also whether publishers are getting some from programmatic into direct. I mean, what has been your experience about the shift between direct and programmatic for at least the South African media organizations?
I mean, the trend is clear, and I don't see the shift to programmatic stopping. It's just going to continue to grow and grow, where the publishers still have an opportunity to sell inventory into DSPs and into media buyers through sort of programmatic guaranteed and programmatic deals. So the conversation and the flow of negotiation and information between the buyer and the seller is still very much over email, over meeting, that sort of thing. But the transaction itself, the sharing of creative and data, and the invoicing is managed within the DSP. And the agents and the buyer side pays a fee on that, which we know, and our clients have exposure to that. And the sell side has a fee there too, which they know. So there's still value and an opportunity to extract a higher media value and sort of CPM through deals for quality inventory. It just means those would be done as a programmatic guaranteed or programmatic direct deal rather than an insertion order deal. However, the advertisers also need to be, I think, aware and widely educated that you still get what you pay for, and we should be buying quality rather than just chasing high reach at a low CPM. Another point on that too is where media owners or news sources are really investing in high quality, balanced, investigative journalism, there's a responsibility from buyers and clients and everyone putting media investment into, I guess, the ecosystem, that good, balanced journalism, well-funded investigative journalism, and some long-form content can be a very compelling proposition for an advertiser. And that is something that can should be worth paying for in terms of a higher CPM through, obviously the association with the brand, with something quality that represents, a good balanced view and fair reporting, rather than some AI generated, quite basic syndicated global, easy to repeat news sources with naughty clickbait headlines.
Well, we heard Friday from at least the Daily Maverick saying business in South Africa is not coming to the party on that, or at least not sufficiently. And the media feels that they have been chasing the lower CPMs that they might get on Google and Meta. I mean, your view of the advertisers and what they want, because I assume some of them come with that brief about potentially even where they want to be placed, or at least some of the inventory and their mix, but their objectives. So what are you seeing from your side?
Sure. I mean, look, there's definitely a mixed and quite a wide continuum of, and I think I touched on this earlier, where we've got, local clients, global clients at different levels of the continuum in terms of digital maturity. And that includes, I guess, the appetite and understanding of certain points of digital pricing. And I'll just disclose sort of the top line here, but when we engage in RFPs to retain some of our clients and attain new clients, both globally and locally, the media pricing benchmarks are often required. And the more the marketing clients, or I guess the marketing executives on our clients and our potential clients, and I guess the advertisers in general, can understand and push their procurement teams on the value of quality media and what are the actual outputs we should be looking for and paying, I think the better, because there is a continual price pressure in terms of, how many impressions or how many spots we can get for the same advertising budget. And yeah, that's definitely a strong collective education drive across our whole continuum of clients, but also the wider advertising ecosystem in South Africa to push for higher quality and expect a view of rather buying a quality CPM. So, one of these sort of pricing benchmarks you'd fill in would be a rather nasty looking Excel document, but that's fine. It might look nasty, but I think, Excel analysis is very much our game. And it would have lots and lots of rows, many, many rows, and each row would represent what is the sort of price point you could buy a certain media owner's inventory on, and what would be the targeting criteria. And that might be audience or data points, etc. And then a lot of the columns, I'll just give you some of the headlines of the columns, would be what's the bought CPM? Then, so that would be, I guess, what you pay for the inventory directly or through a walled garden interface, so the price that matches the invoice. And then quality criteria. And the more we can understand and widely educate on the quality criteria, the better for the whole ecosystem and the benefit of investigative journalism and, I think news, and ensure we have a healthier sort of ecosystem. Those quality dimensions include things like in geo. So is that ad impression that you're buying at the invoice price, is that guaranteed to be in geo? So that would mean in geography, broadly, are we looking to buy usually targeting in South Africa? But sometimes a programmatic buy, might be targeting multiple geos or picking up inventory from markets where people don't sit. And certainly where our clients aren't selling products or services. So that in-geo guarantee is really important. I mean, we need to be buying either, if our client's trying to sell in South Africa, then in South Africa, or more granularly into certain regions, whether that's coastal, inland, etc., depending on the client brief. The other elements, or I guess the other columns in this marvelous spreadsheet I've mentioned, would include viewability. What is the average viewability of the impressions bought from that media owner for that audience? Now, we would always target as high as possible, because if an impression isn't viewed, there's absolutely zero value to it. The additional quality benchmarks and measurements would be ad fraud and brand safety. So have our third-party verification providers confirmed that there's no ad fraud going on here? Often there's a little bit. There are bad actors I've mentioned earlier. There's a lot of really naughty misinformation sites and AI-generated websites that are built purely with the intention of exploiting an arbitrage model. So they'll run advertising to their site and then generate advertising revenue from their site, and they're masquerading as a news source. And this is something we absolutely need to collectively eliminate. And then that other sort of quality variable would be, I've touched on viewability, brand safety, where, And again, on our continuum of clients, there is a strong resistance from some to allow their advertising to be adjacent to or associated with certain categories of content. An example of that continuum might be on the one end, where there's a really heightened risk, would be, I guess, a client selling infant formula, where they would need to make sure that there is no brand unsafe content around them. So, just in summarizing those sort of quality criteria, all of those ladder up to reducing the brand and the advertiser's exposure to financial risk, legal risk, and reputational risk. But at the same time, those quality criteria should ladder up to a quality price benchmark, like call it a quality CPM rather than just the bought CPM. Now, that's where, in theory, and data can prove this, but I can't quite easily disclose it, but certain inventory that you might buy at a high CPM actually translates to a lower quality CPM because the ad is viewable, it's brand safe, and it's not as fraudulent, and it's in geo. So I think that that's an area where we do need to continually strive as an industry to push for. So we're not just racing to the bottom.
And so, Julian, I mean, I think that was
clear.
Yes, no, incredibly useful. But I suppose what I take away from that maybe, and I just want to check whether this is fair, is that we may have many immature digital buyers at the moment who are chasing the low CPM, who need to be educated. That if they are educated, that might change their behavior. But also that for agencies such as yourself, if they are just chasing bought CPM and lower prices, it would drive agencies to also try and put before them to win that proposal and win that work, lower CPMs and how they can get content on the same publisher at a lower price. And that's not to fault the agencies, it's maybe a product of this race to the bottom, as you put it.
Sorry, was the question about possible amateur buyers within the system?
No, more just whether that's a fair, that in South Africa we do sit with some immature marketers who are looking at bought CPM, not quality CPM, and who may then, on the back of that, push for, at least in choosing an ad agency and proposal, who can deliver on the lowest bought CPM rather than the real quality. Is that a fair comment? It was more my question.
Yes, I would say it's a fair comment in the sense that the digital media ecosystem it's complicated, and it's continually complicated, and it changes very, very quickly. So it's very difficult to be a master of all the changes. TikTok, ByteDance recently launched TikTok's advertising product. I mean, that's, that continues to evolve. As more and more channels allow for programmatic inventory to be sold, the whole ecosystem gets confusing, where data and technology and data science is now a critical skill set within our buying and I guess our strategy teams. It's a fast moving landscape, and I think because it's moving so fast, the nascent and the sort of default understanding by many areas of the whole supply chain is people are just kind of struggling to keep up with the changes in tech. So you might have mastered paid search and paid social, and you now need to quickly master the programmatic. It's just a continually fast-moving space. So maybe that might link to a bit of the amateurization and maybe the lack of full digital maturity from various areas of the ecosystem.
And
sorry?
No, I was going to ask, I mean, so is there a prospect that this starts to turn around? So are you seeing in more mature markets, and it's not to say that ours is necessarily far behind or different, but amongst mature buyers, a switch back to the quality. And so this pressure that publishers feel at the moment might abate at some time in the future if there was more maturity in the buying.
Yes, I think so. Definitely. And, we're members of the local chapter of the IAB, and I know last week, I can't remember who had shared it, but there was the IAB PwC study, which kind of looks at how digital ad spend is kind of shifted around locally. We contributed to that. We also publish and share with our clients an annual, it's called the This Year, Next Year survey, which looks at, I guess, GroupM's view of spend forecasts by channel, by market. So within South Africa, we do that across Kenya, Nigeria, and South Africa. And in that, the total ad spend is very skewed to, I guess, sort of paid search and paid social. But again, that's looking at the long tail of advertisers. A lot of local businesses who might just load their credit card into, I don't know, like the Meta Ad Manager suite and boost a few posts with their credit card for a couple of $100. But again, there is a long tail of those advertisers from the GroupM clients, both locally, regionally, and globally. And my interactions with the counterparts, at least I have in our business across EMEA, where the publishers seem to be doing well and have sustainable business models, is where they can collaborate. It is almost impossible for publishers to have the scale of data and knowledge than the walled gardens. But I have been following the Ozone project in the UK, where a whole bunch of publishers have come together and they're trying to look at a shared single sign-on, where they can actually share audiences amongst each other and taking the view of collaborating as media owners, as sellers of ad inventory, gives a stronger position and a more data-focused proposition to box quite fairly against some of the walled gardens.
Well, we've been less successful getting our hands on IAB reports, so we would appreciate if you put a good word in for us there. I think it would help us just understand what is happening as well. I mean, you've talked about the data. Just give us a sense of almost, and this may be orders of magnitude, how much is going to paid search and paid social as opposed to just more programmatic. And I would include in that, I suppose, YouTube. I know it goes through a DSP, but it is still content coming from at least Google, who owns YouTube. I mean, how much of the spend roughly goes to those properties?
A fair amount. It's not something I can disclose on the sort of full splits. That would definitely need compliance and client consent. But the truth is, within the total media investment managed, we do also sometimes struggle to classify where YouTube sits, because YouTube is a content creators sort of aggregator, it's also a social network, and it's an online video platform. So does YouTube fall within our paid social budgets or our connected TV and online video budgets? That is sometimes a point of discussion, and it varies client by client, depending how the client allocates their budget or their thinking. But where within paid social, we do see significant growth outside of the pure walled gardens within social. So, X, Meta, TikTok, and Snapchat. And that growth comes out of the sort of influencer economy. But in terms of the exact splits, that's not something I can disclose.
No, fair enough. I mean, you've mentioned data a few times. I just wanted to understand why they have such a large share, because data is one aspect, but inventory, it seems, is also another potential aspect, how much inventory you've got. And given the amount of traffic and on those properties, inventory might play a role as well. So maybe you can just help us. One view might be, oh, well, they're cheaper, therefore people go for it. But it might be that they're better target, or they've just got more inventory that is targeted. How would you sort of explain to us why they take such a large share?
Okay. I mean, the data referenced is increasingly the ability that is available to the media buyers in platform to target particular audiences, where if we are buying across Google products or Meta products, we are able to target with pretty granular information to particular contexts or audience segments, or even search affinity audiences. So that would be on Google, because they are well aware who is searching for what based on an individual user's search queries when they're logged in, and then aggregated across the whole of South Africa, and then split up into chunks of audiences. So that is incredibly powerful intel that works from a conversion perspective. So if we're trying to sell cars or consumer electronics or diapers, significant audience intelligence is available, which is packaged very well in the buying interfaces. And it is the aggregation of the data points that the walled gardens have very cleverly generated and are utilizing to allow for targeted advertising. Over and above that data point, when supplemented with data we may have, or our clients' first-party data, which is, like compliance data, can be equally compelling and proves to work well from a sort of a conversion rate. So how many people land on a website, as an example, and how many convert, whether that's closing a shopping cart or filling in a lead generation form or whatever that conversion may be. So ultimately it's about aggregating lots of data available within the walled gardens and how powerful and useful that data is from a media buying perspective. And
just a question, because for us this is, as you say, very complex, this world. So for the publishers, even if they're using Google Ad Manager, do they just simply not have the same extent of data, which makes it harder to target and makes it slightly less attractive as a product?
Well, I'm not too familiar with Google Ad Manager. I know broadly its usage in the ecosystem, but not as it's not a product I log into often enough. Put it that way, because I'm more on the buy side. But from my top line understanding was there is still quite a lot of information available to users of Google Ad Manager within where you're using Google Ad Manager. So that might be on a website or a collection of websites. You do have quite a bit of contextual information on those websites, which can be used to create audiences on your data. But again, that's on one publisher's view using Google Ad Manager. You add that across the whole ecosystem of tags where there might exist a Google tag, and that's quite compelling. An analogy I'd like to give on that is, and this predates the acquisition of DoubleClick, when Google acquired a business called Urchin, which was in the dates, but a quick Google search would tell us. But Urchin Analytics was very much an enterprise grade analytics package. And by analytics package, it was for web analytics. So website owners would use Urchin to give them information on what was happening on their website, who was visiting, where were they from, what geo, on the website, what were they interacting with, which pages were popular, which were least popular. Google acquired Urchin and shortly thereafter rolled it out as a free analytics package. So just about any website or blog owner would add Google Analytics tag, and they would get pretty good information for free, which was great because as a website owner, you would know where your website traffic is coming from, how you can optimize for natural search, outside of your organic traffic, what was paid for, where was it coming from, how your website was performing, if you had an e-commerce site, where were your conversion rates, etc. Again, just data points. And it would be good for one website owner because there was compelling enough information to justify putting a tag and then logging onto Google Analytics for free. But the collection of data across every single website property that had installed Google Analytics was just incredible. And again, building more and more data, which could be used for audience targeting, etc. So a very powerful proposition, which at the time was free, but yeah, they are certainly from our client base, we're exposed to alternate, I guess, more enterprise analytics packages, which seems to be the shift away again from free, which makes sense. I mean, some are from Google, some are from other providers.
And I suppose, as you said before, if it's free, then you're probably the product.
Precisely.
I mean, related to this, you mentioned the third-party cookies and that this will disappear this year. I mean, just to get a sense from you, so as we understand, that's a sort of refollow. You went to look or search for hiking boots, and now you're moving on in the web to look at some news, and you're on maybe the Daily Maverick site, and suddenly hiking boot advert appears there, and that's because these third-party cookies have followed you, and then you've gone on to the news site, and the SSP says, I've got this person who's looking for hiking boots, who wants to bid. I mean, is that roughly how this sort of works?
Yes, correct. That's a good analogy and example. I do wonder if your possible product of hiking boots was linked to seeing my surname on screen. But yeah, correct. I mean, a cookie. It's a bit of a strange word, and I'd love to understand the history of why it was called a cookie. But maybe it was linked to the fairy tale Hansel and Gretel. But a cookie is basically a little piece of JavaScript code that gets built into the code of a website, which basically would send signals to enable the journey you just spoke about, where a hiking boot selling client may track around their users and then serve the hiking boot ad to someone where they wouldn't ordinarily think to advertise. Because if you're selling hiking boots, you would think, okay, cool, well, I need to have partnerships with, I don't know, like hiking and outdoor sort of portals and websites and apps. But ultimately, the avid hikers or someone about to buy a hiking boot might be reading outdoor websites and apps, but also checks the weather and might be reading the Daily Maverick, to your point. Something quite unrelated to hiking, but based on the knowledge of that user, that becomes quite a pertinent person to target. So yes, cookies was the technology, I guess, that enabled that targeting. So maybe as consumers, we'll see slightly less creepy experiences and advertising. But at the same time, it does open up opportunities for hopefully a wider, broader, more fair ecosystem. And some of the opportunities we're exploring on our behalf of our clients to help navigate this is we'll definitely see an uptick in contextual advertising. And that would, in a nutshell, I guess, what is the context of a website page or a video? And does that context match the product or service we are trying to get in front of the viewer of that? Rather than it being based on, we know that person looked at the hiking boot and 5 days later, let's target them when they're online. Outside of that, artificial intelligence is also an area where we should be able to use data points to quickly determine someone's interests and target accordingly.
So just so we have a sense, I mean, how much of the digital advertising has been linked to third-party cookies, and just how important it is, or has been, and that might change?
So we would estimate, trying to think, about 40% of some of our clients' digital media investment would be impacted in that reporting would change. And yeah, performance measures would likely need to change because we would be less reliant on remarketing.
I mean, that's much higher than I thought. Look, I suppose the other view is that these walled gardens, if you put them, still have that information in any event. And I think the concern that has been expressed in some quarters is that the traffic will shift even more to those walled gardens. So as you plan for this period, I mean, it seems you are thinking about this. I mean, what do you expect the impact might be on at least the news media in South Africa and their advertising?
Well, the truth is, if there are less remarketing audiences, will advertisers need to buy more top funnel media again, and contextual and higher quality media? Hopefully so. And that would benefit news media in South Africa.
All right. I mean, what we've also heard from the media, I suppose, is, and you've also confirmed this, they need to improve data collection. They need better data to also compete, partly in a post-cookie world, but generally there's better data on the walled gardens than there is on their own sites. So I mean, how do they improve that to make it more attractive to the advertisers and to be able to target interests rather than just demographics, say?
Well, I mean, from an interest perspective, the publishers and media owners are sitting on quite a high volume of context. And that could be as simple as looking at every image would be tagged on site, and obviously all the written content would have be tagged by the content of the written language in it, which gives pretty good clues into context and what the context of the particular pieces of content are about, which can be used to build out audiences. For the publishers who have invested in collecting in a compliant manner email addresses, which are POPI compliant for marketing, that's also powerful. And for the publishers who have the ability to invest in data and technology to enable for that to be shared with advertisers and buyers, that's a compelling proposition for the future.
So, I mean, what I would understand, obviously, publisher has quite a wide range of content, but if I'm, reading a story on the Cape Town cycle tour in the week leading up, that might give me context that they're a cyclist or they're interested, there might be other interests, but they would have to, I suppose, build up around that reader that information and look to sell that data to advertisers through their programmatic advertising.
Correct, yes.
I deliberately avoided the mountain analogy, and it wasn't hiking boots for that reason. I was just reading some other submissions this morning that used that example. Just on the DSPs, I think we're sort of familiar with, based on the direct to search and social media, what sort of targeting they can do, because that's very visible in the public domain. You can go and look at those pages. Outside of those walled gardens, just a sense of how much targeting is possible, is offered by the DSPs or the SSPs at the moment?
So within the DSPs, a fair amount is available. So I think the ones mentioned previously, like Trade Desk, Adform, and Xandr, they do offer similar sort of targeting. From an SSP perspective, because we are trying to look at the shortest paths to supply in utilizing SSPs, some of the SSPs do offer sort of inventory or audience packages. And again, that targeting is based on a number of criteria and variables. But it can be quite similar. It just doesn't necessarily include search intent.
And I'm interested that you reference your interaction with SSPs, because I suppose maybe for an outsider in this, you get this view that the publisher only deals with the SSP, who then deals with the DSP through some exchange, and then the DSP only deals with an agency such as yourselves or direct to the advertiser. But you're talking about, relationships with SSPs. So can we get a more nuanced understanding of the relationships that do exist and why you would still be asking for specific SSPs to channel your products, and whether those instructions to DSPs?
Yeah, sure. So globally, our investment teams have been trying to understand the programmatic supply chain, because a lot of our collective clients' investment goes through programmatic. It is a high growth area, and more channels are coming online onto programmatic. Connected TV and programmatic digital out of home in particular. In markets we are very close to catching up to. So our investment teams continually look at where is our programmatic investment going globally, collectively, and have actually publicly announced partnerships with 3 SSPs, Magnite, Pubmatic, and Index Exchange, to help us simplify the programmatic supply chain, reduce our reliance on a multitude of SSPs, and basically deliver the shortest path to inventory possible, which works in the benefit of our clients and the media owner effectively selling that inventory at the end of the chain. So even though we use the DSP and our trading teams are logged onto the DSPs, they are loading creative, they're looking for audiences, they're buying media, they're optimizing media within the demand side platform interface. We are also looking beyond the DSP, further up the supply chain, I guess, to understand what's happening at an SSP level so we can simplify the programmatic chain effectively. So that's why, even though the SSPs have a commercial relationship with the publishers, we still need to understand the full supply chain, which in programmatic has been a little bit messy, but collectively there is a lot more transparency coming into the programmatic supply chain. And I'd like to think we're helping drive a big part of that.
So what would you give instructions to your DSP that please use these 3 SSPs? Don't bid on inventory coming from other SSPs? Is that how it sort of works?
That is an instruction we can make to our teams who are actually operating in the DSP. So you can, as a trader, a programmatic trader operating a DSP, actually select which exchanges or supply side platforms you would want to buy on. We often run campaigns specifically on certain SSPs and sort of A/B test against each other to understand the pricing, the inventory availability, etc. of the SSP. But the truth is, and what we've noticed in South Africa, we cannot only buy off our 3 globally agreed SSP partners because that throttles inventory. We still get a lot of inventory from Google Ad Exchange, so we can't just turn that off. That would be to the detriment of our clients who are investing in programmatic and still expect the same level of reach and impressions.
I think I've got even more confused now, but let me... So I suppose, the view often painted is that SSPs can access any inventory, and DSPs will programmatically bid and choose amongst the SSPs offering inventory, and it's happening so fast. You've just gone from one website to the next in the cookie world. That's a second, and now something that's available and decisions are made, can only be made electronically rather than and programmatically rather than by a team sitting there. So let me just start with the first one on the supply side. So is it not the case that every SSP has access to every?
Not necessarily. And just a point of clarity, it's not my intention to sort of confuse. I'm really trying to assist and help sort of understand this sort of ad tech landscape. The SSPs are also do need to liaise with the publishers. And, I think a lot of the SSPs, and I'm sure more of this will come to light later in the week, but they would have publisher relations employees who, if they realize a particular geography or market makes sense to grow, they would then go and meet with all the publishers in markets and try and make sure that they sell inventory, that they then sell that publisher's inventory.
All right.
So I wouldn't say it's automatically available. The SSPs would need to meet with publishers or at least have some level of communication with them. Because from a publisher perspective, I don't think the publisher would necessarily want every single SSP to sell their inventory on their behalf. Publishers would also, I'd imagine, optimize which SSPs they work with.
All right, because they had to approve an SSP to be able to access their inventory. And so it is still a choice that they make. And Julian, you're doing a great job of helping us understand. So that throwaway comment wasn't meant to discourage you. It's as you peel away the layers, more questions and more questions come up. And I think it's certainly beneficial for us and the public that we start to understand some of this. I mean, you also mentioned, in a sense, it's not just your relationship with some of the SSPs, but also how publishers might have relationships with DSPs. I mean, it's partly that you can access, I think you mentioned, certain inventory. So Walmart has a partnership with the DSP to sell its inventory. Again, this is sort of at odds with how we often were thinking about it, that a publisher only deals with an SSP and then it goes into an exchange. So is also happening a fair amount with publishers, and why do they want a relationship with the DSP?
So that seemed, I think the example I gave was more to, again, that was a massive North American operation, which I don't think we could compare too closely to maybe some opportunities on our continent. But I think the truth is that a lot of businesses globally would prefer to also see more options on the DSP perspective. And it's very unlikely Walmart would have structured a deal like that with Google to make the Walmart inventory available through Google's DSP, and they definitely wouldn't have done it with Amazon's DSP, given the obviously conflicting business models in the retail space.
So you mentioned getting more options, and again, I'm going to ask you maybe this orders of magnitude, but outside of buying on Google and YouTube properties, I mean, how much do you use the Google DSPs? I think it's Google Ads and DV360 for accessing third-party inventory. Is it a substantial amount? I mean, I think you said you're not going to choose loads of DSPs. You are going to use a few, though.
Yeah. Look, the Google Ads and DV360 usage is high, without a doubt. When we're evaluating DSPs, we also trying to have a single view of the customer and trying to deduplicate reach. So if you're using multiple buying platforms, often it's difficult to deduplicate the reach, because one platform might tell you you're reaching 1 million people and you might get the same story from 4 platforms. But are you really reaching 4 million people? It's sometimes hard to deduplicate that reach and to show our clients a fair, valid, truthful answer of reach, which is one of the reasons using a smaller number of DSPs would definitely be helpful. So in orders of magnitude, DV360, Google Ads are quite high up on the list with our total digital investment.
And you're just moving on to your, I think it was your path optimization, and you spend a lot of time explaining how you're trying to I suppose have the shortest route that also benefits the publishers as well in receiving the funds. I mean, this is again an area where I think the media feels there isn't much transparency, and I think we heard on Friday as well, one mentioned an experiment by the Guardian newspaper where it advertised on itself and reckoned it got 30% of the total spend. I just wanted to understand from your side, what you think. Sorry, I think either we froze or you froze for a moment there, Julian. Julian, can you hear me? Julian, are you...
Sorry, apologies. My internet dropped momentarily. The
No
last
problem.
I heard was on Friday as well. I think you were referencing...
Can you still hear me, Julian? Julian, you back?
Sorry, I'm not sure if you can hear me. I've lost audio. I'm just trying to...
All right, I can hear you, so...
Don't know what happened there. Apologies.
Can you hear me again now, Julian? Apologies, everyone. We're just trying to get hold of Julian again and just bringing back on stream.
I'm back. Apologies. I hear you loud and clear.
Oh, great. So let me just go over it again, Julian. As I said, you've looked at path optimization partly to make it simple, but also to cut some of the costs to the benefit of your client and also the benefit of the publishers on the other side. And all I was saying was, this is an area where the media feels is not transparent, and there's various, maybe let's say, views going around. But the one presented Friday was an experiment by the Guardian newspaper where it advertised on its own content or inventory, and on that experiment, it said it only got 30% of what they spent came through on their side, suggesting a very high takeout. We see many numbers, and it's quite confusing for us. But maybe if you can give us a sense of what the range may be, because, what you've sort of highlighted for us today is you could optimize that path, or you could have not a very optimal path, or you could have those who charge more. But what is the range from your estimate, given that you don't necessarily have a full line of sight, that disappears between the spend on the advertiser side to the publisher side?
So it's very difficult to estimate that range. Ideally, that would be as high as possible. The reasons it's difficult to estimate are, I guess, the limited information we have on our side. Not all DSPs share log-level data, and our log-level data gives significant information into what were the bids we placed on inventory. And again, we're talking billions of data points because we bid often, and your win rate is only not every bid is a bought impression, because not every bid matches the selling price that is required for the instant programmatic exchange to happen. So that's one of the reasons we are a bit short on the information. It's interesting to hear the Guardian test. I know I forget the exact timings at this point, but there was an interesting study published by the ISBA, I think a UK or European-based body done in conjunction with PwC to understand where various elements of the supply chain were allocated to which areas, the agency, the buyer, the seller, etc. And at the time, there was a percentage in the missing middle, which was broadly sort of unaccounted for, which is one of the reasons our supply path optimization view has been, we interrogated it really closely. But to answer you directly, I can't give you an answer on the South African missing middle or what the actual take rate is on publisher side. We simply don't have enough information.
I mean, I think it's interesting that those on either end of this chain don't know and don't have line of sight. I mean, are there any DSPs, or now you've got an SSP relationship as well, where you can get that information so you have a full line of sight? Or is it none of them are able to give you that?
I believe industry bodies could definitely get together and from the buy and sell plus the intermediary side, figure out the exact take rates across the chain.
Sorry, we're just checking with each other as we just need to wrap up, and I must thank you for the amount of time you've given us. You mentioned WhatsApp, and I just want to understand, is that growing as an advertising channel? Are there advertising products on that? I mean, we've seen some changes with communities, with the channels. So as a media agency that's looking to buy, I mean, is this now on the radar?
As a media channel to purchase inventory on, no, it's not really on the radar. There is limited, I guess, digital media inventory available on WhatsApp, if any. WhatsApp, I guess, serves more of a technical purpose to build communities, which could be linked to sort of mobile commerce, but it's not necessarily a place to advertise on. Where clients have properties on WhatsApp or communities or growing sort of mobile commerce channels, we can use inventory that's available across Meta's other suites of products and channels like Facebook and Instagram as examples, to direct traffic to a client-owned WhatsApp property. But within WhatsApp itself, no, there's not much available. But across the wider Meta ecosystem, yes, there are advertising options directing users to WhatsApp.
All right, so it's directing the client more than anything, to say you can engage with, your database of consumers to interact with them.
Correct, yes.
Maybe just one last area before we give you a break from your seat. But on the click fraud, ad fraud, and verification, I'm just, you say you do verification, and as I understand, GroupM has a load of tools to help you with verification. I mean, I would have thought this was something done by those in the ecosystem, the DSPs, or at least on behalf of advertisers. I mean, we also heard Friday that ad fraud is potentially $1 in $3, which is a frightening number. But you had said, there's ways to detect this and investigate it. But are you having to invest in verification, or are the tools in the industry improving for you?
Well, we utilize third-party tools to help in this area, the likes of Integral Ad Science, Double Verify, Oracle. There are a number that we use. The investment required in these tools is I guess, paying their rate card for usage to sort of measure and track. These tools do offer, and look, I know we're short on time, but to your question about do the DSP offer these tools inside of them? Yes, to an extent. So one view here, and to make the split clear, is the tools offer opportunities in Programmatic to measure pre-bid or post-bid. So if we're going to buy the pre-bid version of the tool, which is before the bid happens, so basically that happens in the DSP, where we would select the usage of one of these third-party verification partners to block bids before they happen, based on, signals of ad fraud, bad, unsuitable brand safety, or low levels of viewability, which don't match the thresholds we're trying to achieve for our clients. So that would be the pre-bid side, which blocks the bid completely. That is implemented within the DSP, and the flow of funds means that the cost of that third-party verification provider for that pre-bid activity is added onto the DSP invoice to the advertiser. On the other side is post-bid, which would be after the bid, and that's where you would get more information and intel back from the third-party verification provider, giving you a bit more clues on where to optimize and make changes. But that would be after the bid has happened. So there's more information on which were the websites which were not suitable from a fraud, brand safety, and viewability perspective.
And if you suspected, yeah, no, this helps a lot. I mean, if you suspect, so let's say this post bid, and you picked up that it went to, a particular site where you think fraud is more prevalent. I mean, is there any recourse for the advertiser if there had been some ad fraud or click fraud?
Again, there are many scenarios to figure out. That's why we try to stay on top of this 100%. The growth in ad fraud is, look, the bad actors are always trying to get one step ahead of the game so they can continue with their dodgy behavior and their gangster-like revenues, right? And the usage of AI and generative AI is one area the fraudsters are increasingly exploiting, because they can quite easily, through the use of generative AI, create YouTube channels and pretty big-looking sort of media empires with pretty sophisticated content generation, which might be very real-time and basically creating made-for-advertising sites. So yeah, collectively we definitely need to shut down this behavior. But in terms of the recourse to the advertisers, yes, certainly our clients should never be paying for fraudulent inventory, and we work hard to push it out. But it's an onward moving battle.
No, I'm sure, and I think we've seen that picture. Sorry, one just follow up on that. So on media sites, a big area for this fraud. I mean, you mentioned sort of showing that you're a media empire, but is media particularly vulnerable to this? Because we also heard last week that AI is scraping their stories and repurposing them. BNN being a particular interesting player in this, with reporters that seem to be able to put out articles within seconds of each other. But is this a real particular threat to media, or is it broader than them?
I think it's broader than just media. If we look at the number of national elections happening on the planet this year, the amount of mis and disinformation that is likely in many election countries is going to be quite staggering. So yeah, look, the digital media ecosystem is, and in particular the influence of social media, is something we need to watch very closely.
Well, Julian, thank you very much for the time you've given and the time also in making submissions. As I said, I think this is partly an education process as we go through these hearings for ourselves, the public, and even, to be honest, some of the media. And I think you've given incredibly valuable insights from the other side of that chain, which is the advertiser side. So we really must thank you for sharing that with us. And hopefully you'll continue to follow the inquiry, and we'll have future engagements as well.
Right. Thank you very much. And the best of wishes for the rest of the week. Thank you.
Thank you. And we're going to now take just a 5-minute break, and then whilst we get our participation from Dentsu online and ready to proceed, and that will be the last session until 1 o'clock, and then we'll take a break until 2 when the SABC is coming. Thank you.
Okay. Bye, thanks.
Welcome back to the first day of the second week of the Media and Digital Platforms Inquiry. And now we have Dentsu International, represented by Sadiqa Levy. Welcome, Sadiqa.
Hello, thank you. I've also got present Leilani that's with me in the room.
All right, we also had Leilani's name, and I didn't know if they were joining us. But thank you so much for making the time, and also thank you for your submissions you made to date. We did have, I suppose, maybe one of your competitors, GroupM, before you, just hearing about the advertiser side, and I think it's of a lot of interest, especially to the media companies, and for us to understand the whole chain.
Yes.
But Sadiqa, maybe, I know you don't have a presentation, or at least I'm informed you don't. But I think before we have some questions, maybe if you can just give at least the public an understanding of who is Dentsu. Well, also who are yourself within Dentsu. What does Dentsu do, and where it sits in this whole value chain from advertisers through to the publishers.
Yes, so I'm Sadiqa. I am the Group Performance Director for Dentsu Africa. So work across performance, which is digital and tech. And then Dentsu is a global agency, a media agency that has multiple agencies sitting within Dentsu, from media brands to digital agencies and creative agencies. And we are a global agency, as I've mentioned. And we basically buy media on behalf of our clients. If we look from an ad tech perspective, how we purchase media based on clients' challenges, so brands' challenges. And then we build partnerships with our partners across the globe, not just locally.
Great, thank you, Sadiqa. So I think just coming at it from your side as an agency, and this was a question I had for for Julian as well, but just to get a sense of client expectations around budget and performance. I assume as the performance director, you're looking at how those ads perform and where to get performance out of the ecosystem. But have we seen with digital and programmatic advertising that expectations have shifted around what performance they can get for what sort of budget?
So yes, I think for South Africa, because we have lots of challenges from a load shedding perspective, obviously from a marketing perspective, clients' budgets has shifted to buy digitally. So where we and how we purchase is obviously aligned with what clients' challenges are. And at the end of the day, if you drive performance, you're actually buying audiences and following audiences within the ecosystem. And that's where programmatic obviously falls a part of that ecosystem in a whole holistic digital approach that we do.
And just as I understand, also part of I suppose, the funnel, as is often called, I mean, there's sort of raising awareness, there's making it top of mind, there's then driving the conversion down. So would you have different objectives for different parts of the budget or for different clients in terms of their campaign objectives?
So yes, we obviously buy differently. So whether you're buying CPM or CPC, buy based on the funnel and how you need, what the KPIs are for a campaign and the objectives. The budget allocations will obviously be different. We're allocating the budget. So if it's for awareness, consideration, and engagement, and then conversion, each part of the budget and the buys will be completely, our buying methods will be different. And
you mentioned that there has been a shift to digital, and you link that partly to the challenges. So do you think if I had to maybe speculate, are you saying that maybe in more challenging economic times, budget suddenly shrinks and people want more out of their budget because they are under pressure from other parts of the economy or other expenses?
Yes, that's correct. So clients are being challenged to spend their marketing budgets very wisely. So we got to make sure that we spend those budgets where they're getting the most value from.
It just we get a bit of a sense, and we see the advertising trends over time, but is there just less money for advertising, or is it just shifting their budgets?
So I think for each brand, it's very different. So some might cut spends completely due to challenges within a brand, or some might just be shifting spends more into digital.
Right, but digital scene is more, let's say, cost effective for the performance you get.
Yes, cost effective, and also like you can speak to the data and see where consumers are actually engaging and what type of consumers. So there's obviously truth in the data that we provide because we can track consumers from a digital perspective.
All right, data does seem to be important. So is this the data you've got out from, or the performance reporting you get from, I think we're now more familiar with the lingo of DSPs or some of the platforms that sell their own inventory?
Yes, that's correct. So it's obviously twofold. Like we can either use clients some first-party data, or it's data that we build in the technologies of the DSPs.
I mean, maybe if you can just unpack that from the client's data and then the DSP data. So is the client's data what sales they've seen or conversion rates, or maybe just help us understand the two sides to performance?
So clients have their own data based on consumer and what they've gotten back from their consumers, whether it's subscribing to newsletters or promotional cards or I don't know, like promotions that they run across their stores. So they gather their own data. And then from a platform perspective, once we start opening the funnel from an awareness perspective, we can then see who's engaging with the brand and then start targeting them and obviously making sure that they engage and build up a new entire data segment for clients based on interests.
So if you were running, let's say, an awareness campaign, you would get data back from the DSP about some of the demographics or psychographics of people who did engage that advert, and so then that helps narrow your target after that. Is that what I understand to be the case?
Yes, that's correct.
I mean, I think we heard through the last person that sometimes also the clients will come with some of the publishers or properties and inventory they would like to be on. That, I mean, just to understand from you, does that happen, and why does it happen?
So yes, clients do request which websites they want to be, and it's obviously based on performance and results they've previously seen, and therefore they want us to purchase back on those websites.
And Sadiqa, we heard last week as well that there was a debate about whether advertisers who've seen performance might then start to buy direct on those websites, or whether they continue to do some of the programmatic and target those websites through the programmatic, which might come at a lower cost per thousand. I mean, what is the behavior you're seeing for those clients that do see some performance on certain websites?
So it's obviously based on what they see they're performing. So a lot of clients, so we've got it's twofold again. Some clients want to purchase directly from the website and not allocate budget in the DSP, or some just want to target the website through the DSP.
And I'm sure there's a mix. I mean, any sense of people trying to use the DSP to target more than deal direct? Because I think what we heard last week is that with a lot of publishers, they obviously want to sell their best inventory direct, and then they'll also release inventory that's not sold through their side, the SSP. So I suppose the question is there more of a shift towards targeting through the DSP?
So I think because we're following an audience, no matter how you get that audience, the goal is to drive performance to that audience so that they can engage. So at times when you also purchase like directly with a partner, you might still get that website through the DSP because you're tracking audience behavior and you're not really buying impressions on a specific site because we're buying through a DSP that has multiple websites. So, and because we're tracking audiences, we are making sure that we get to that audience at the right time and when they are consuming content.
And just so I can understand, I mean, what is the kind of data or information you're getting on performance from your DSPs? I mean, apart from just, we used your budget to generate this many impressions and it had this many click-throughs at a cost per click of so much. I mean, are you getting information that says, well, of those impressions served, so many were within your target audience, so many had these interests that we can verify? So just trying to understand the level of granularity of performance reporting that happens.
So again, it's based on KPI and objectives of a client. So it's what client wants to see, we report on because we have access to the data in the ad tech platforms and we set up our campaigns based on the KPIs of a client. So what they want to see, we build out our strategy on that, and then we report back on what they want to see. So it can be based on entrance, location, the audience types, age demographics, etc. But again, it's based on what they want to see as a client.
I suppose that, Sadiqa, the question is almost, like if I went to say Meta and put in my variables and factors and bought a budget and my bidding parameters, I mean, would I get a report that says, all right, 20% match this interest in your list of factors, 30% match this? Or is it a bit of a black box that, well, I put in those parameters and we trust that it happened?
So yes, we need to put in the parameters, but we also need to make sure that we have the right resources that can build out more granular reporting for us based on what the data says. So we build those skill sets within our Dentsu teams that can give us more than just a black box.
All right, and do you get that data from the DSPs or the publisher websites, or do you have to go and seek to build that verification outside of that ecosystem?
So it's basically we get it out of the platform, but we make sure we have proper tracking on it so that if we are looking at other tech to support and analyze the data even further, that tracking mechanism is placed on the ads.
And we're starting to be educated a little bit on click fraud, ad fraud, which are terms that we weren't that familiar with when we started the public hearings. And as we understand, click fraud is where these bots go and click on adverts to use up an advertiser's budget, but there's no human at the other side. And I think ad fraud is slightly different, where you might fraudulently masquerade as, say, a media company and sell ads when in fact you're not. And that takes ads away. I mean, how big is the problem of click fraud and ad fraud in digital advertising in South Africa?
So I like it, it's there, right? It's real. We obviously use different technologies to ensure that we eliminate those type of problems for our clients. So we have technologies overlaid onto our DSPs that we pay for, so that we can make sure that we don't tap into that space, and that we always looking at what is in that space and how do we eliminate it.
And how do you help your clients, if I can understand, avoid falling into the trap of, let's say, click fraud as the most obvious one? I mean, is this an arrangement with the DSPs? Do the DSPs have tracking of which sites are more likely to be vulnerable to click fraud? Just give us an insight.
Yes, there's a lot of work done from a DSP perspective. So basically, they are tech partners. They're not like, there's a lot of work put in from their side to eliminate that. So they can also look at what's happening in the system. And therefore, like even when we run campaigns, they are, at the end of the month, we can see what has happened in the campaigns from a click fraud and like just bots getting access to our campaigns, and basically we don't pay for that type of behavior.
All right, so you don't pay for that behavior. I just want to understand then does the DSP said, I bid on this, and this was click fraud to the website or wherever it was, and do they also get compensated?
I'm not sure if the DSPs, how it works on their side.
All right. I mean, it may be, well, I would be speculating at this stage. Do you know if the DSPs, if sites pop up that are looking to sell advertising as sort of, I mean, clickbait and drive traffic and then use click fraud to get the money? I mean, do DSPs engage with like your web engines or search engines around how to bring that down? Do you know what's happening within the industry to try and stop this?
No, I'm not. I don't have any context of what there, because again, these DSPs obviously more in line of a tech, so they've obviously got the resources that is trying to work on the structure, but I'm not sure what they are doing behind the scenes to make sure that it doesn't happen.
All right, hopefully we'll get to ask some of them as well. But Paula, you got a question?
Hi, Sadika. I know that when you're placing ads, you really are following the audiences, and it sounds like it's quite automated, and that you're really using technology to guide that process. But I'm wondering, from Dentsu's point of view, in looking at those audiences, whether ads with content that is more credible, like news, has a higher value for you than simply content that is being produced possibly either through generative AI or by people who don't necessarily have as high standards of content as news publishers might be. Would you place a higher value on news content in those cases and with those audiences?
So again, it's different based on audiences and how they engage, right? And consumer behavior. So it's based on what their interests are. So every day, the algorithm changes based on consumer behavior. So today we might see that there's a high intent on news, and then tomorrow it might be in shopping, and the next day. So because digital is very agile, again, consumer behavior is very agile. So you've got to, and therefore we track audiences based, but there's no specific. We build out basically what they're interested in, but again, that behavior changes every day. So there's no clear view of what that looks like.
Thank you.
I mean, just to help me understand. So are you saying you're seeing today that there's high intent on news? What do you mean by that? Intent to buy once I'm surfing on a news site, or how? Help
So
us
in terms
understand.
of like not just to buy. So if you're on a news site and you're reading an article and there's an ad that is you're interested in, you're going to click in. If you're not interested, you're not going to click on it, right? That person might not convert, but they'll show intent into that brand. And then tomorrow we might put that ad, or it might be showing on a shopping website, and then they might buy. So again, that's why the behavior is so different from a news to any other category, because it's based on the intent and how the consumer's absorbing that content and what the intention is on the day.
And how do you track them from one day to the next? I mean, we had heard about third-party cookies tracking while I'm in a session, but how would you track them one day to the next?
So we track them based on what the tracking we put on the creative, and we build out our audiences in the platform. So we obviously don't just have one line item that we load within the DSPs. We have multiple line items, and then we track their behavior and we track the audience through the ecosystem so that we can get them to purchase.
So, I mean, is this a form of third-party cookie where you tag someone and then just follow them?
Yes.
And can you do that whatever site let's say it's me, I've gone to today? So if I engage your advert, I get tagged and I get followed around over the subsequent days. Is that how it works, or do you have to go through someone who does that for you?
So we'll do it. We'll basically track you based on what your intents are on the different days. But we also have obviously frequency capping, so we cap and we don't waste impressions.
And is that a third-party cookie that we understand will start to shut down this year, or is it a different technology?
So we basically use CM360 or Seismic, which we obviously track our campaigns on, and the tracking will be on all our campaign setup from creative setup, pushing through to the DSP, and then we start tracking.
All right, so it's not a particular DSP that does this for you. It's more other tech, all right, as I understand it.
Yes.
I mean, I did want to get a sense from you, from the advertiser, when you say that they might sort of say to you, can we look at particular websites based on performance? What are is this fairly random, or are there websites or platforms that come up more frequently in terms of the request for putting their budget in there?
So it's requested based, right? So it's based on loyalty, and obviously these clients or brands have been on these websites for years. They can see the engagement, so therefore they're still requesting to go onto these websites. Yes, so we basically, based on the request from client, we purchase for them on this website directly on their behalf. But it's based on what they've seen, and again, based on the results that the partners are giving them.
All right. I just wanted to understand, I mean, we've seen, which I wasn't necessarily aware of, that some of your media companies are selling promoted posts, either on social media or also trying to sell where they have a partnership with YouTube, that a particular sponsor or advertiser can be on their YouTube video appearing. how big has sort of promoted posts? So I'm almost aligned myself with YFM or SABC on their social media feed. How important has that become, or not, within your world?
So again, it's very difficult because, like, again, you're buying audiences. So if you allocate budget there, it's not like there's a set budget being allocated. It's based on performance and how it works for clients. Sometimes it might only get a 5% of the budget, sometimes 10%, sometimes a 1%, or sometimes nothing, because that's what we clients want to play in. So we don't really break it down to show what the percentage or at the end of the day, what budget we're overall spending or tracking it as promoted posts. Like, we don't go that granular down to make sure that we speaking to that specific ad unit.
But does the ad tech then decide, because I mean, I understood those as more direct deals. There might be. So maybe even in your decisions, not necessarily what the client sees, but are promoted posts useful forms of advertising?
So yes, it probably is. Like, a lot of the times we show clients that we're going to do promoted posts just from a budget perspective. It's not like holistically Dentsu look at what did we spend for the month on promoted post, or because it's more the client. So whether it's a YouTube or Twitter or any other partner, we look at the overall spend there. So we are investing there, but it's not like there's a big focus. It's part of the buys, but as I said, it's different for every client.
Yeah, because I suppose, I mean, the question would be, well, I could buy a promoted post on Facebook, or I could just advertise through Facebook. Is there a particular value proposition that a promoted post has that makes it attractive?
Yes, because you also want to tap into a different audience. So you still have your promoted post plus your normal buy on Facebook. Again, playing within that same segment. So we buy directly or from Facebook. So if we shift budgets in between based on how the audience are engaging between a promoted post and a normal post, then we'll shift spend to make sure that we're reaching our KPIs. Because we're a performance agency, we need to make sure that all our buys are in line with performance and we're achieving our KPIs and objectives of the client.
And that's what I suppose I hadn't maybe appreciated before today, that if you're a performance agency, you're more actively engaged in how to manage a campaign rather than putting in some specs to a DSP and saying deliver on that. So are you far more active around changing your campaign on a daily basis? Is that how it works?
Yes.
And what sort of parameters are you changing? Are you shifting between different mediums? Are you shifting your targets? Or are you shifting from engagement to purchase?
So we're shifting basically down the ecosystem. So from awareness down, we also make sure that our teams are hybrid specialists and trained on a global scale. So therefore, they can basically shift budgets across platforms based on where we want that consumer or getting that consumer in the funnel.
All right, that's definitely helpful. Thank you for that. And just on the difference, I suppose, between search, social media, and then the third-party sites. I mean, we've always understood search. You've got search intent, so it's intent-based advertising. I mean, social media, it's data-rich, and you can get their interests or what their friends' interests are. And I mean, it seems that's a lot of data-driven. So search seems unique, but the other stuff seems data-driven. Is that an advantage that those platforms have over the third-party sites?
So yes, they do. They're obviously tech-enabled more than the other sites. So they obviously, there's a lot of work that they put into enabling their tech to deliver the results that we look for. But again, it's a full ecosystem, and we need to make sure that from attribution, we enable all partners to drive the performance that we can reach our KPIs. So each partner or each, like search and social and our DSPs, all have a role to play within the full funnel so that we can deliver our results.
And is there much, sort of, let's say, interest or display advertising through the Google system, or is it all just search intent?
All search intent. So we buy search intent.
All right, because we've also seen that Google monetizes on the Discover feed. Is that something that has come up in a new area for your placement of advertising? That seems more interest-based.
No, I haven't been privy to that yet.
All right, and just in terms of the demise of the third-party cookie, we heard some estimate from the previous participant, but from your experience, how much of, let's say, spend tends to go into that remarketing initiative that works with the third-party cookie currently in South Africa?
A lot. So, if you look at the partners, they're obviously making sure that the technology becomes, that there's work put in, and we need to enable certain things that the clients and the brands don't feel the impact. So there's been a lot of training around that and what we need to enable and how we need to do it, from the client's website to maybe into campaign setup, that our teams are working on, so that there's not a massive impact when it does officially fall away.
And given all the work you've been doing, what do you expect the impact will be more on where you advertise, rather than, let's say, you're working hard to ensure the client isn't impacted, but to do that, it might impact where you advertise or how you advertise. Maybe if you can give us some insight of how you think that's going to change once the cookies disappear.
So we obviously need to do some work on it to see how it's going to impact brands and how it's going to impact us and how we buy. But until we get there, like, a lot of the work that we're doing is to secure our clients and make sure that they are covered, but that also they understand the impact, if there's any impact to us and how we buy, that they support us on that, so that we can obviously make sure that we make the right decisions for our brands. But we'll only know once we get there.
And just on the DSPs and your engagement with them, one can place campaigns with different DSPs, but do you tend to use a sort of smaller group of DSPs, or do you switch and move between many DSPs for achieving your objectives?
So no, we try and keep it minimal, so that we obviously buy efficiently for our clients.
So you just use a few DSPs?
Again, our buys are based on audience. So we make sure that we buy audiences. So if the audiences is engaged, because we're not just buying through DSPs, we're obviously buying different media on different technology platforms. So we make sure that we're not using 5 different options and keep it very small, so that we can reach the consumer and make sure we give value for clients.
All right, but for the digital side and the programmatic on DSPs, you also try to keep it small, is that right?
Yes.
And does that mean you've got more either efficiencies or you get a better price because you're bringing volume, or both?
So no, it's more for the efficiencies and all the data sitting in one tech stack instead of using multiple that we got to build out. Because obviously, again, that is efficiencies from a Dentsu perspective in how many staff we have running and how many campaigns they're running, and then making sure that we are driving efficiencies across one tech stack and not multiple.
All right, so I suppose each may report or have a different interface, and so it's easier if you're dealing with one you know. Is that correct? All right.
Because again, as I've mentioned, our teams are hybrid, so they work across different platforms like social search and the DSPs. So we can't have them working across multiple DSPs. It's not going to be efficient for them.
All right, and I don't know if you can say, but who are the DSPs that you predominantly work with?
So I would have to also just check with our compliance team if I can share that information. Because again, that's obviously based on how we buy, and our compliance needs to approve if I can share the details.
No, fair enough. You know, I didn't raise it when we started, but yeah, you mustn't give us confidential information. I mean, is a factor in choosing the DSP how well it interfaces to some of the important SSPs that have a lot of inventory? Is that one of the factors that you also take into account?
So we build our structure in Dentsu around performance and tech and product enablement. So we make sure that when we look at what we're using, that they are a tech hub, they can build out products that's sufficient for our clients, and obviously that it's enabling not just one story, but the full ecosystem of digital. So that is what we take into account when we look at the partners that we partner with, to ensure that as Dentsu, we are making the right decisions for our talent sitting in the business and also for our clients.
Sorry, we had heard this morning that one might also build relationships with certain SSPs. I mean, is that something you do too? And if you do, why do you do that?
So no, we don't.
And is it because you see no value in that for you yourself?
I think so. Like, I'm not sure. We haven't gone down that avenue yet. I think because we work obviously across multiple brands and we have multiple team members. We're trying to make sure that we are good in what we have at hand and how we drive that forward. So we haven't looked into from an SSP perspective.
Sorry, Sadiqa, I'm just checking the questions that I had, whether any are left. I mean, maybe just one last question. You know, I think Friday we heard from some of the media that they feel business in South Africa has not necessarily supported the news media and has been seduced by or maybe that's an emotive term, but chase the lower cost per thousands or cost per clicks on some of the big platforms like Google or Meta. I mean, what's your view on that comment? Is there still a fair amount of support for direct?
Again, it's basically like when brands cut budget, they cut marketing budget first. So clients want to see value. So clients obviously look at cost also. And we got to drive it and support that strategy for them. So if clients are looking at cost, we need to make sure that we are buying based on what that requirement is for client. And then if there isn't partners that is falling in line with that, then it's unfortunate, but sometimes clients see the value of these news portals and therefore they want to be a part of it and they'll pay to be a part of it. So it's again based on the client, how agile they are, and how we need to support that narrative for them as the agency.
Well, thank you, Sadiqa, and thanks for coming to participate today, and to Dentsu International for agreeing to be in part of the public hearings. I think the public hearings do play such an important role in informing the public, as well as those that may be in different parts of the value chain around what happens, how it happens, so that not only can we understand and make some findings in this inquiry, but also, I think, become more informed as to how the whole value chain operates. So I think your insights have been valuable, and I do want to thank you for your time and your submissions, and also for hopefully future submissions if we have some follow-up questions.
Perfect. Thank you so much.
Thank you.
And that
Bye.
Bye, Sadiqa. And that does conclude this session. We'll resume at 2:00 with the SABC, who will be in the DTIC campus with us. And then this evening from 5 to 8, we have Microsoft.
Thank you. Bye.